When many Australians first hear the words reverse mortgage, they often worry about one thing: am I putting my home at risk? It's an understandable question. What many people don't realise is that reverse mortgages in Australia are heavily regulated and include a number of legal protections designed specifically in the interests of borrowers. The first protection is called the No Negative Equity Guarantee. This is one of the most important consumer protections in Australian reverse mortgages. It means you or your estate can never owe more than the value of your home when it is eventually sold. So even with the loan balance growing over time, if property prices were to fall dramatically, the lender cannot pursue you or your estate for any shortfall, and the lender has to bear any losses. This protection has been built into Australian reverse mortgage legislation to provide peace of mind for retirees and their families. The second protection is something many people are relieved to learn. A reverse mortgage does not mean giving ownership of your home to the bank. You remain the owner of your property. The title stays in your name. And provided you continue meeting the loan obligations such as maintaining the property, paying rates and insurances, and continuing to live in the home as your principal residence, reverse mortgages include a guarantee that allows eligible borrowers to remain living in their home for life. The lifetime occupancy guarantee means that no matter what happens to the value of your home or the size of your loan, as long as you have met your obligations under the loan contract, you cannot be removed from your home against your will or forced to sell. You retain the right to live in your home for the rest of your years. That means you can access equity without giving up ownership of your home, and the security and comfort knowing you can stay there for as long as you choose. For many Australians, that's one of the biggest concerns in relation to reverse mortgages. The third protection is something called lending limits. Reverse mortgages in Australia are not a case of borrow as much as you want. There are strict government regulations around how much can be borrowed. These limits are based primarily on your age, the value of your home, and the level of equity you hold in it. This is called the loan-to-value ratio, or LVR, and for reverse mortgages, these are set by the Australian government. The amount you can borrow depends on your age, the value of your home, your property location, and how much equity you have. The older you are, the more you can borrow, with borrowing capped at 50% by age 90. Reverse mortgages in Australia operate within a heavily regulated lending environment. There are strict rules around disclosure, loan documentation, responsible lending, best interest duty, and transparency around fees, interest rates, and risks. Borrowers are provided with information designed to help them make informed decisions before proceeding. The goal is simple: to ensure reverse mortgages are a safe and transparent option for older Australians. One protection that surprises many people is that legal advice is mandatory. All Australian reverse mortgage lenders require borrowers to receive legal advice before entering into a loan contract. Your lawyer works for you, not the lender, not the broker. They explain the loan terms, your obligations, the long-term considerations, and make sure you understand exactly what you are signing. This process exists to help borrowers make informed decisions with confidence. So to sum it all up, when people ask, are reverse mortgages risky? The reality is that modern Australian reverse mortgages include multiple layers of protection. Protections around negative equity, protections around staying in your home, protections around borrowing limits, and protections designed to ensure you fully understand your decisions before proceeding. If you are considering accessing equity from your home, understanding these protections is an important first step. If you'd like to learn whether a reverse mortgage could be suitable for your situation, reach out to us today. We're here to help you understand your options and make informed decisions about using your home equity in retirement.